Welcome to this week's Magnelibra Econemotions update for May 9th, 2019. For those that are new to our blog, you can visit us at www.econemotions.com, where we write weekly about the important things that we think investors and traders alike need to know. So go over to our blog and you can read a little bit more about how we view markets, and maybe things might pique your interest there to make you think, entice you to think outside the box. Magnelibra is home of the Blue Dragon Global Macro Discretionary CTA program. This is Mike Gagne, and I am the CEO. First up this week, we're going to get to the job number that came out last Friday, which added 263,000 workers, and the jobless rate fell to a 49-year low. And equity markets took that as a cue to move higher. But then Sunday, the big bottom fell out as Trump enacted $325 billion new tariff on Chinese goods, which will take effect shortly. So the markets opened up Sunday night and they weren't too happy about it. As you can see here, the Nasdaq broke below its 76. Well, it broke below there for a little while, but it held the 76.79 level, traded below there and right back up to it. But recently, as of yesterday, breached the 7,600 level and is threatening there again. But you can see the big run up from 2019 to now. And we view this as a topping formation, but we need further confirmation, which will come if we trade back down to our magnet down here, which is our 200 period VWAP down at 74.50 area. So, you know, are we out of the woods here of sustained break lower? We don't think so. We think if you're a dip buyer here, you got to be very careful, because look at where we're coming from, and these tariffs have been known to wreak havoc on our markets. So without a resolution to that, we feel the markets can turn south, and turn south in a hurry. So be cognizant of this 76.70 area. If we can't get back above it, the risk is down to this VWAP again, and we aren't even sure that that will hold, so be careful. In terms of gold, it ran up on Sunday night, but has fallen back since, only mustering up above the 1292 area. Last week we talked about the 1288 area being pretty significant, and we're back below there. So this is more consistent of a stronger US dollar. We feel that is going to keep gold a little bit on the defensive, but it did pop and has now fallen back. But what will pop is the yen, as we all know that the yen is the currency of risk off, and anytime there's comes trouble in the markets, especially the equity markets, we can see money that comes in over here, and it certainly didn't fail this time. So and for those that follow the currencies, the yen has been putting in a nice base, and a little breakout above this 91 area should lead things higher, so we're going to keep an eye on that one as well. Back to our overall world equity market cap, and since we're talking about the Nasdaq and then topping out over there, so we can see here back in November of 2018 that we were above the 80 trillion mark in terms of equity market cap across the world, and we backed off from the same level here now. So you can see how far we've run since December, and you know, this came with that $1 trillion PBOC injection here, and that really set the stage for this run up. But you know, we're kind of turning over here. We got saved a few times here and here, but this time, you know, if we get below this, you know, we could have a swift downturn. And can we lose 10 trillion? Sure. You know, so we've come a long way in 5.5 months, so you know, be cognizant of this as well, of where we're coming from. It's all about timing, guys, so we've got to be careful of where we're getting in certain terms of valuations. Deutsche Bank put out a great article about who really holds the cards here when it comes to the tariffs in China, and we know that Trump only negotiates from the position of power, so we weren't too shocked at Deutsche Bank's findings here, and in fact how fragile the Chinese economy is, and considering how big it is, how much money they've printed, and you know how much they rely on exports. We do feel that the U.S. is negotiating from a power position, and the chart that they had in here, which is down here, will blow up here. Basically, you know, it talks about if China's current account deficit continues to move south and they actually need funding from the rest of the world, will they get it? You know, will the money come? I mean, without their domestic authoritarian regime, you know, picking up the pieces or changing the way that they do business, we don't think that they'll have sufficient foreign investment unless things change over there. And we know that the Trump administration sees this and looks at this and knows that they're negotiating from power. So it'll be interesting to see you know, how this all transpires and works out. But one thing we don't want to see is these currency wars turn into hot wars, and things are picking up geopolitically around the globe, so we got to be cognizant of that as well. and we didn't really see this widely reported in the Western media, but Costco was forced to sell their U.S. Long Beach container terminal, where they control the ports out there on our west coast, and they were forced to sell due to address security concerns by the U.S. From the U.S. government. So definitely a different posturing from the Trump administration in terms of being a little bit more concerned about this infiltration here, and them buying private assets here, the Chinese buying private assets across the U.S., domestic U.S., and quite a different policy from Obama's 8 years. We read Mish talk. He does a great job. Mish Shedlock. If you don't read his blog, you should definitely go to it. He does an excellent job on most fundamental and economic analysis in terms of how it affects our markets. And we've been a big proponent of criticizing Uber and Lyft, and he did it here when he his blog post entitled "Uber's Big Problem." It's a zombie corporation that can't make any money, and we agree. Even with their subsidy-based, and what we mean by subsidies, they have an unfair competitive advantage over delivery services and taxis out there who have to be licensed and who have to purchase medallions in order to transport individuals. So they don't have to do that, and they still can't make money. So we don't like the business model, and we're glad that Mish is pressing the same issue here. So, but that doesn't mean the investors don't make money. If you look at the VCs, and we're gonna cash out on the IPO, which is set to price at about 80 to 90 billion valuation. So the investors do make money, but they pawn it off on the retail investors to cash out. So do we think it's a good long-term growth prospect? We don't think so. We don't like the business model, and Lyft should be gives us a little hint of that as well. I mean, you got to make money, period. So if you don't make money, the investors, are they going to support you like they did Amazon for a decade? We're not so sure. And even if you did get in here on the IPOs, you're down money. It's now once again, are you going to sell out, or are you in for the long haul? But I don't know. Can you buy it cheaper? Sure, probably. It's down 38% from its highs. So let's keep an eye on Uber and Lyft, and like we said, the unfair competitive advantage, if it goes away and the cities start taxing, then we think that'll be a death knell for them. So keep an eye on that. We also saw Button be highly critical. Button, he was talking about buttons actually. Warren Buffett out of the Motley Fool when he was talking about Bitcoin. I never understood why people ask Warren Buffett about Bitcoin. We all know he's a value investor. We all know he hates gold, and he's not going to get into something risky, although he's made some bad bets and hasn't beaten the S&P in over a decade, I think. So, to ask him about Bitcoin, I think is a little bit crazy. But, when he talks about something about it, he said, what's Bitcoin? It's I'll tear off a button on my coat and call that a token, and if I give it to you for $1,000, and we'll see if I can get the price up to 2,000 by the end of the day. The button still has only one use. It's very limited, but, I don't know, that analogy didn't make much sense to us, but we most of our readers know we are a fan of blockchain. We are a fan of the decentralized technology, the immutable technology, and we think Bitcoin is the early winner, and will continue to be that way for the foreseeable future. So when asking Buffett's opinion on Bitcoin, we really don't take it too much because he's an octogenarian, and what's he gonna say? What does he really know about it? I don't know. His advisors might tell him about it. Who knows? He might even own it. I mean, he might just be not even saying anything. But we're not gonna take too much consideration to him discrediting Bitcoin. So we're big fans of it, and so apparently is Amazon of the technology it's built on, which is blockchain, and which is something that we think Amazon will be a big player in the years forward. And we've always said, why isn't a big player in the tech space just come out and created their own token, and where you don't even have to convert it to fiat, you can use it for whatever is on the site, and Amazon has a big goods and services supply, and they're into food. They bought Whole Foods, and they're into healthcare. So I'm waiting for the Amazon hospitals to pop up, and then the Amazon mortgage companies, and the Amazon real estate companies, and so once they can cover the whole gamut and your whole full suite of lifestyle needs, then maybe people will recognize you don't even need fiat, and they'll pay their employees in the blockchain token. So we'll see. And even Facebook's getting into it as well. So who are you going to trust? Are you going to trust Buffett, or are you going to trust Bezos and Zuckerberg and these tech companies? I know who I'll trust, and I'll also trust the chart, which is showing me here that it's up to $6,100, and you can see here Bitcoin, it based out here for quite a few months, and it took 6 times or so to break through there, and then we dropped all of a sudden, and then it kind of bottomed out with the stocks in December of 2018. So, but who's done better? The Nasdaq, who's up 20%, or the Bitcoin, who's almost doubled in price here? But one thing constructive about this chart is we really, if this thing does trade back up into this base here that it formed initially in late 2018, this is kind of a bullish sign. So it's something to keep an eye on, guys. And we don't trade cryptocurrencies, but we do like Bitcoin, and we do think it has a future, and you should too. And there's a lot of naysayers out there, but when something's 6,000 times the price of $1, you got to kind of take notice. So keep an eye on that, guys. Bitcoin is improving in price, and it's entering a huge resistance section. So we'll see how it does here. Zero Hedge. Actually, this was from I won't even pronounce this name because I'll screw it up. But Bryce Hill from the IllinoisPolicy.org. We followed IllinoisPolicy.org before, and they're pretty on it in terms of the how bad the situation is here in Illinois and Chicago, and they're pretty good with the data points. And one of the things they pointed out here in this article was this chart here of how the Chicago area home sales are likely to fall nearly 4 times the national average. Now this doesn't surprise us, and it shouldn't surprise any of our readers, because we excuse me, put on our piece on yearly lesson on value, where we discussed the mortgage and the housing market, and how people continue to overpay, and how it punishes other value buyers, because it just raises the price for everybody, and it can't last. And even homes in our neighborhood aren't even higher than 2008 prices. And how is housing as an investment? People say it's an investment. Yeah, no, it's got intrinsic value in terms of shelter and a home, and there's intangibles within that, sure, but as an investment, I think it's terrible. I think when you consider interest costs and taxation and when you go to sell the house, the commission, it's a net loser, unless you really picked up something on discount and special and put some work into it. But overall, these people are overpaying massively, and they're going to pay for it eventually. And this chart doesn't make me, doesn't really surprise us or surprise me. And when you talk about something like Chicago, the corrupt policies here by our politicians, and where does all this money actually go? When you're paying property tax, what goes to these teachers right here? You see, 31% of this, property taxes, and 37% go to additional services, pay raises, and personnel. I mean, there's a reason why this is the case, guys. This is called kicking the can down the road on failed policies that will never ever come to fruition. And what will happen is eventually these things will fail, because people will migrate out and they'll leave, which is what's happening in Illinois and states like New Jersey. And probably California. I haven't seen the latest data, but I know Illinois has been in the top 5 migration rate in the last, top 2 in the last 5 years. So this is just going to continue. You eventually people just walk away, and businesses will walk away. So something to keep an eye out on. Another article we read here by Andrew Ackerman was we were glad to see that the Fed's actually putting out these financial stability reports, and actually warning of growth in levered loans and elevated asset prices. We couldn't believe it when we saw that elevated asset prices were actually one of their concerns. But a 1.1 trillion market that the Fed said grew by 20% last year. This non-financial corporate borrowing, and this is real money. When you create debt, you're creating money, and you're creating credit, and if you don't make profits and you can't pay it back, then this is when things become unstable. And that 20% growth is massive. So we're glad that the Federal Reserve has flagged this as possible concerns in terms of elevated asset prices and historically high debt. So this is something they haven't really been proactive upon, but we're glad to see it, that they're reporting on it, and this is how they're viewing things. So I'm not so sure that this isn't what is affecting the markets as well. I mean, they talked about the trade tensions and Brexit, and these things are all adding up to an area in terms of where, here we're overdone. So I would be very cognizant of buying any levels up here, and considering how far the long onlys have not had any pullbacks. I think we're starting to see the beginning of a much larger move. So let's be cognizant of that. Okay. And here's something, I don't know if you guys have heard of this company, but Beyond Meat, but we had to include it here because this really piques our interest. This is, they did very well on their debut here. They raised $240 million in their IPO, And now we're not endorsing their product. We've never tried it, but we've heard good things about it, and we might try it and put a review out next week maybe. But I think people are are really health conscious, and companies like this could do very well and catch people by surprise, because I think with the meat prices going up and just the cost of things, now obviously eating organic is very expensive as well, and not everybody can afford it. But we'll, we got to do our research on this company here, because they may be onto something. And it's people are becoming more health conscious and understanding, their bodies and what nutrients need to go into it in order to be more healthier. And this is a growing population that is very concerned with this, and we think that this company could do very well. Now, Wall Street Journal to be critical of them as well, as they put out this article, and basically they said, their 2018 sales of 87.9 million compared to their price, their stock price is 50 times that. So this is, obviously, can they sustain that kind of multiple? We're not so sure, but if we obviously had a little bit of a pullback here, but let's see how this one pans out. We do like the motivation behind the company and how they're operating and doing things, and so we thought this should definitely be on our investors and traders radar. Like I said, we don't trade individual equities, but this is just something, the blog is to put things into your mind, to do your own due diligence, your own research, and to bring it to light into your consciousness, onto your intelligence, and see what you think of it. And this is why we bring you Apex Legends too. Who's heard of them? I know you've probably heard of it, like EA Arts, Electronic Arts, but they finally got a good game to compete with this Fortnite. And for those that don't know Fortnite, well, now you do. These taking these teenagers by storm, and Fortnite makes a ton of money in the billions, and they have very limited overhead. They got these things called skins that they sell. They got V-Bucks, and Apex Legends is trying to compete with this, and it seems like that they had a decent launch so far, but we'll see how they do. But it's about time somebody competes with Fortnite. Moving along here, we also read today Ken Griffin was out. Now, we're usually pretty critical of Mr. Griffin when he comes, kind of like how we are with Ray Dalio, who comes when they speak in terms of, how society should act or behave. And, although these are very smart, intelligent, sophisticated investors, if they're speaking to a younger generation who might be from a not so financially set position, they're going to take their words with a little bit of disdain, and we can't disagree with them. But something he said in here in this interview from ValueWalk.com really resonated with us, and we agreed with him actually. And what he said was this: we are seeing an ever-increasing sharp division between the states that pursue policies that create opportunity, that educate children, that allow people to have a great career, and states that continue to pursue failed policies that result in corruption, cronyism, and crime that are devastating to cities like Chicago. Now, who couldn't agree with that more? Now, you're talking one of the titans of business here in Chicago, and this is how he's talking, but he makes the very obvious points that there's certain areas in this country that are doing well to cultivate jobs and careers and education, and there's certain areas that don't. And these are, he points out Chicago point blank, of the crony capitalism, corruption, and crime. And we couldn't believe it, but we were glad that a guy like this points this out, and we agree with him 100%. So one thing it's hard, for the younger generations to not embrace socialism, because they think like, well, it's so hard to get to a point like where Ken Griffin is. But in reality, you can't go that far left where you think that the society should be taken care of by the government. It just doesn't work that way. It has never worked that way, and Venezuela is a good case in point. So we just need to get rid of the crony capitalism and have a little bit more rules and regulations around sustainable economics and finance, and grow things in terms of education, and how we really teach our young people how we teach our young people to be not only better humans, but more respectful of others and others' ideas. And I think that'll he didn't talk about a solution, but for me, I think that's a good solution, a good place to start. But you got to start changing the young mindset and installing the belief in them that they have what it takes, that there is opportunity, and you got to make the most of it, no matter what situation you may be confronted with. So, give the article a read, see what you think. We saw this. James Comey is in trouble. This former FBI Kevin Brock wrote this article, a 24-year veteran of the FBI, and he was very critical of Comey. And this is what he said. James Comey is right to be apprehensive. He himself ate away at the soul of the FBI, not in small bites, but in dangerously large ones. It was dinner for one, though his actions are not indicative of the real FBI. The Attorney General's comprehensive examination is welcome, and if done honestly and dispassionately, it will protect the future presidential candidates of both parties and redeem the valuable soul of the FBI. Basically, this guy was super critical of James Comey and what he did, and we hope that these guys, that were doing bad things, illegal things, and I'm not speculating saying he did, but we're hoping that it all comes out to light and that this country can stop being so polarized and divisive, and realize that we actually are all on the same team, and we all want a better country, and we all want fair, equal, and equitable justice. So keep an eye on this, because this is just the beginning, I think, of what's going on in terms of corruption in our government. Moving along here, I'm not sure who listens to Macro Voices, but Eric Townsend does an excellent job with this. It's probably one of the best podcasts out there in terms of financial trading, investment. But he had Juliet DeClercq on, and she did an awesome job of analyzing the Federal Reserve and the situation that they're in and where they intend on going. And she spoke about this: how the higher break in the U.S. dollar will affect inflation expectations in the Fed's cutting cycle. We couldn't agree more here, and we think this is going to catch a lot of people off guard, because everyone looks at the dollar as like, oh, we're printing so much money, look at our debt, it's going to collapse. What they don't get is that you have to pay U.S. debt back with U.S. dollars, and there is a massive shortage of those dollars. So if there's a shortage of something, just exactly how is it going to collapse? And that's kind of our thinking, and she thinks that that's going to really affect how much they can cut, and actually the actual economy is going to affect how much they can raise. So what are they going to do? Anyways, it's a great podcast. I suggest you listen to it, and she does an excellent job. Another thing we read actually just came out today from Jesse Colombo, an analyst at Real Investment Advice. If you don't read these guys, you really should. They do an excellent job as well. And he talked about this guy, this Chamath Palihapitiya, who basically said the odds of a recession are zero because of the central banks. And we hate talk like this too. It's just complete nonsense. This isn't an authoritarian regime that can just fix things at just by printing money. Even if you did it that way, you just end up having socialism, because too many people would be in despotism, and everyone else, the small elites, would control everything. But anyways, he put out this quote by Irving Fisher back in 29, which was I didn't know it happened 13 days later that the market crashed, but he said Irving Fisher asserted that what looks like a permanently high plateau, and then just 13 days later the market collapsed. And this is a great chart here. You can see how things really work, like when you have a startup and it's funded by VC, and you've got maybe institutional investors that will take a little bit off of the VCs and take a little bit of the valuation, and then they have the IPO and it goes public, and then the retail, look what they're left holding the bag. And then so this is a great chart. I actually might have to ask Jesse if I can use this one at some point, but I've seen it before actually, but it's something that we're in this situation now, so we'll see what happens. The new paradigm, yeah, this is what this guy says. We're in a new paradigm. Central banks don't have, they are a non-zero sum player, but even they have limitations. Most notably the U.S. bond market. So anyways, I thought this was an excellent chart, and I don't know who this Crunchbase News is, but if we do turn around and this is the top of the market, then I am going to call this new bubble the VC bubble, because I can tell you how many private equity guys and VC guys I hear and say the deals. I don't know who's paying these prices, but they just keep rolling up in this deal. This chart basically says that we've got close to 50 deals raising $100 million or more. I mean, this is just crazy. If this isn't a hockey stick bubble top, I don't know what is. But if we did this, if this 2019-2020 era turns to be the big turnaround, then I'm going to look at this chart and I'm going to call this the VC bubble. So, okay, that's it for keep an eye on that, guys. And as you know, we do think you need to be very cognizant of this, so be careful here. And to wrap this up, we're going to go here through nothing to do with trading or investment, but something you guys should read from Scientific American. We were actually shocked that a well-known periodical would put something out that actually questions the Big Bang Theory. But this Bjorn Eckberg put out a pretty good piece, and it's entitled "Cosmology Has Some Big Problems. The Field Relies on a Conceptual Framework That Has Trouble Accounting for New Observations." Basically, what he's saying is, as we observe new things in our technology advances, then the old theories kind of have to be tweaked because of what we're newly observing. Well, if that's the case, then the theory is basically wrong. And how long are we going to hold on to this and before we totally change everything and really see our realm and our universe for what it is? Most of my readers know that I believe that in the electric universe, and the fact that plasma physics isn't as studied as widely as it should be, considering it makes up probably about 90% of our universe. But most people don't even know what plasma is, so it's crazy to me to think about. And as I grow older, and I'm wondering about everything I've been taught, and it's like, really? How come we don't know more about this? Even it says here, for a crucial function of theories such as dark matter, dark energy, and inflation, which each in its own way is tied to the Big Bang paradigm, is not to describe known empirical phenomena, but rather maintain the mathematical coherence of framework. And this is what we're talking about. Science needs to be clear-cut, observable, measurable, and repeatable. If it's not, it's strictly theory. And we hope that we kind of move more towards that, away from theoretical science and physics to a more concrete, observable scientific explanation. So give it a read, guys, see what you think, and that's it. Magnelibra Econemotions is out. Have a good one.